Good afternoon, everybody. Here we are again, Market Mavericks, back with you guys at 3 p.m. Eastern time on this Thursday. And the three wise men, we're going to call ourselves the wise men this week instead of the amigos or the Three Stooges.
I'll
So we'll
take it.
go, yeah, a little bit better this week. But let's get right into it. We got a market reversal today, and I was just talking about this, and I just want to pop my chart up here so we can kind of take a look. But basically what we're seeing is the S&P 500 opened higher today, sharply higher on the back of NVIDIA earnings, and then all of a sudden just selling, selling, selling. In fact, if we go to the 10-minute chart, it's been nonstop. We had a little sell at the open here. This is a 10-minute chart, so this is the first 30 minutes, consolidation, and then just down we've gone. So the question I throw it to you guys is, I mean, do you guys think that this is a potential top in the market? What do you think, Mike? I'll throw it right to you. Let's hear it.
We start out with Market Mavericks, where if you do this long enough, you know sometimes the market makes you feel like a real stooge. And I have been feeling like a real stooge in the stock market for quite a while. Admitted, apologize for that, but it's all that matters. When the S&P has, let's start with what always happens in bull markets, normal back and fill, 10% corrections. We only had 5% since October. Everything is going to trickle down from that. So to me, what you showed is pretty significant. I love those type of patterns. We just did an upside down and day down in like the last 5 sessions. And this is not the time of year supposed to go down. Before long holidays, stock market's always supposed to go up. So it's classic high price cure profit taking. But I've seen pretty significant peaks in crude oil. Now that was just a bear market that's tilting lower. Significant peaks in copper, made a new all-time new high. And tilting down, and what copper, it's like the devil's metal. They use that term for silver. It looks like it's just flipping down. The gold is even correct. Gold was way overdue for its normal 10% correction. I've been saying it can easily get back down to 2,200. Still, that's just normal correction. But from my standpoint, and of course we're seeing Bitcoin, but Bitcoin actually kind of led the way down here. It kind of caught up to beta and then started rolling over this morning. It was already recall day. So I think, and it should lead. It's the fastest horse in the race. But to me, yeah, okay, I'll attempt to not be a stooge again, but I think it's finally the beginning. And at some point I can show you some of my charts that people have seen them from before, but some of them are just so overwhelming that we're so overdue for just a normalization of a bull market before we even tilt over to a potential bear market in the stock market, which we haven't had since 2009.
I think one thing to keep in mind, and I'm trying to remember specifics on this, but I remember that historically tops have been made in the market when there's really, like, when it's max bullishness, right? And you could argue that these NVIDIA earnings were amazing, like markets were already at all-time highs going into it. And I think if I and I don't know if you guys are old enough. Well, Mike, you are probably, but but in 2007, I still remember vividly. I believe it was the Blackstone IPO came out, and it was so hyped. And it came out, and that was almost the top right before the Great Recession. And again, it still sticks out in my mind. It was my very early on in my career, but that was quite something. So here we are. And again, I guess we'll find out in the coming weeks if the markets are finally in correction mode. I guess the question I would throw to Scott is, does this mean that Bitcoin is going down?
Can I first offer a opposing perspective?
Yes, please
bring
do.
up my screen.
Yeah,
because all I'm seeing right now for this moment is a simple retest of previous resistance as support. So this doesn't bother me at all, actually. So when I look at the S&P here, yeah, I mean it's a slightly below, but you usually get a wick. So maybe we fill this gap, and then come back up. But it doesn't scare me from a technical perspective at all when I'm looking at this retrace. And I'm just, maybe it's PTSD of trying to call tops in past markets for years, but one day does not get me worried at all, especially when we've seen things like this, right? A massive V-shaped correction with much bigger daily down candles in the midst of it. I mean, you take a look at Bitcoin right now. I literally have been writing newsletters all week. Okay, we're above the middle of this range. We're going to probably go back and test 67, right, at support. Make sure, and that's exactly where this range EQ, the middle of this range is right here. That we're probably going to test that to confirm that we're trading in the top half of the range, by the way, still chop, and not the bottom half of the range. So now, if we can hold this 67, I think that gives us actually more confidence that we're going to go up and test the highs again. So for me, like, it's a down day that's testing support, and we'll see. I remain bullish until there's a reason not to, and it's going to take me a couple more days to switch that. I'm not saying you guys would be wrong. Those are bearish engulfing candles you were showing there on the SPX. I mean, there's a lot not to like, but I mean, you do still have NVIDIA doing this.
So
Right.
let me
right?
let me piggyback on that. Even my colleague who's been
By the way, I
spot on.
love the diversity of opinions. I love that. I
Well,
think people
we got to
appreciate that
disagree,
too.
or it's
Yeah.
not worth it, and have some discourse, and then just have a beer about it later. But that's what makes market tight spreads. But my colleague Gina Martin Adams even pointed out Nvidia is looking a little stretched, and she's been spot on for. I mean, just nailed the stock market pretty well. But I got to show you a chart that part of the reason I've been waiting for this, and you mentioned 2007. This is the one chart I pointed out that made me a lot of money in 2008. Yeah, I had to have the pain of 2007. That's just the lessons of the what the chart says. Volatility is always mean reverting. And all I show you is a 52-week average of the VIX volatility index minus the T-bill rate. It's at the lowest since 2007. Now, it stayed down there for the longest time in history. I was getting really antsy. This is when the housing market started peaking. But that is the kind of thing, okay, it's going to revert at some point. Now, I pointed out some other things. And here's one key thing, a macro, and then I want to tilt over. This is the big picture macro. Let's go back to a 100-year chart. Just take S&P 500 divided by GDP in trillions at a add two zeros, and you can put on the same scale as the S&P 500 divided by gold. And both of them combined have never been higher. I'm sure I should say S&P 500 has never been higher versus both gold and GDP at the same time. And this is the key thing I'm going to tilt over, the key thing I'm worried about with Bitcoin. Now, Scott, you showed it. You showed charts that look good. All the charts look good. That's the way they're supposed to. That's when you have to put on your contrarian hat and say, okay, what's the valuation? But this is something that's bothered me for quite a while. You take Bitcoin versus gold. This is not the kind of pattern I want to see. And what I saw, we all knew this was a perfect storm for new highs. I wouldn't say I knew it. You guys predicted much better than I did, but we made a new high. But if you take Bitcoin versus gold, this is a divergent top. This is showing general weakness. If you take Bitcoin versus beta, lower high. I just point out this is not good from the fastest horse in the race, supposed to be beating beta with the perfect reason to go to new highs. ETFs have been launched, the halving's over, and beta potentially is peaking. That to me, I look at it as the fastest horse in the race. And if we're right, at some point, this is going to matter. This little thing, volatility, is going to pick up. Remember, it's a 52-week average, and you're just looking for signals for that to trade on. And then I point out copper looks like it's peaked, crude oil looks like it's peaked, and then we have these. I'm afraid about this is divergent weakness in Bitcoin.
It's just funny. I look at that chart, Mike, and it just shows maybe it's a result of bias or the lens, and I see a bull flag on the end of that chart.
Yeah, so I don't disagree with that. It's just, but that's the thing. This is not that's the difference. This is a ratio. This is Bitcoin versus beta. All-time high here back in 2021, second a lower high in 2021, and then a lower high here. So that's the difference, and that's my point. And then you look into the context of what got this high here. It was launch of ETFs. It took 10 years to get there, and now what? We're nowhere in a bit. We all know, Scott, you've been on top of this. We all know we're in a bit of a Bitcoin hangover, and that's why I like to rope it in the Bitcoin over with the S&P E-minis.
Mike, how do you define beta in these charts? Like when you're dividing something by beta, so it's specifically S&P, so not Nvidia or the Qs or something like that. It's the stock market as a whole. Okay.
When I was at a hedge fund, Global Macro. We use S&P E-minis as beta for everything. And you do an evaluate risk model, and just like what's happening now, when beta moves 10% or 1% today, it's all that matters. But more so than ever, as I pointed out, is versus this chart here, it's the most expensive versus this measure in 100 years. So that's where I look at it. It's okay. You just look for signals. So here's just the S&P mini, 50-week moving average. You have at least this is a divergent weakness trend in Bitcoin still. Higher highs in beta and lower highs in Bitcoin.
Yeah, so and very interesting, the charts there. But I just want to show this, guys, and this is why I'm making a leap and wondering. And Scott, you're right that none of us know if this is a top or not on the S&P, but if you look at this is the weekly chart of the S&P 500, and if you take the high of 2007 and you stretch it to the high of 2021 right here, what's interesting to me is that we came up the previous pullback that we just experienced, and this is again the weekly, so every candle is a weekly. We didn't get back to that trend line. Today, we finally hit that trend line and we get the reversal off of it. So again, that's quite the trend line going back to the 2007 high before the Great Recession, the 2021 high before the 2022 bear market. And then the other thing to just point out here, just going to NVIDIA, and I don't know how NVIDIA will end, but if we take the 2021 high of NVIDIA, stretch it to this high, we were above it earlier. We're now seeing it come back below. And on the daily chart, I'm actually watching to see, is this a topping tail? So a potential reversal
A gap up and topping tail would not be pretty for NVIDIA here.
Yeah, that would be and also the fact if it closes back below this trend line, which it's kind of inching lower and lower as we go. So listen, like you said, I mean, no one knows. I mean, heck, the Fed could come out dovish tomorrow and we could be up 500 points.
That's not going to happen. That's
but,
to me, but I'm glad you went there, Gareth, because before NVIDIA earnings came out yesterday, we started hitting the tape. All the Fed minutes came out, and Fed governors and a lot of announced it just started hitting the tape that they will not ease.
Right.
And there's other people saying they're not going to ease, and that's a statement I've been making for a while. It's silly to expect the Fed to ease with the stock market with most inflation levels. Well, not only that, okay, the massive speculation in the stock market and inflation measures above their target, and with stock market cap a double the level of GDP. That's just silly in terms of history, particularly for Fed who's trying not to repeat the lessons of too much inflation. So to me, that's what was just getting started, and the market's figuring it out again today. It's the high price cure that really crushed commodities since 2022, and it's really trickling over the stock market. I.e., it's just silly to even think about easing in an environment like this. So when people say the Fed puts come initially when you have to drop 20%, and then you consider it. But we're up 30% on a 1-year basis in beta.
I opened Bloomberg, obviously, just before the show to get the quick market wrap, as I usually do, right? You know, they kind of have the running market wrap. And I just almost want to die laughing out loud to myself every time I read the narratives for what's happening in the market. Literally, you read Bloomberg or any pundit right now, and they say market is drawing down, stocks under pressure because the expectation of rate cuts is being pushed back, when anyone with a brain has been looking and going, why would they cut rates? Like, how is today any different than yesterday? And how does that explain what's happening in the market? What was so impactful today that all of a sudden rate cuts are less likely than they were yesterday? And by the way, rate cuts aren't always good.
Yeah, true. And I think it's important what you brought up about yesterday, the Fed minutes. I thought it was very interesting that in the Fed minutes, there was a disagreement on tapering the balance sheet runoff. And we didn't really get that from the last meeting when Jerome Powell gave a speech, but apparently there was quite a few Fed officials that said, hey, what are we doing slowing it down? Which I'm like cheering. I'm like, yeah, like I hate that every time there's a crisis, they jack the balance sheet up 100, 150%, and then they take it down 10% when things are good and then jack it up another 150%. So I think that's key, is the market's starting to realize things like that. And one of the things I'll point out here is that WSM, which is a stock, it's Williams Sonoma, high-end retailer. This had great earnings yesterday, and I've seen this in so many charts this earnings season where these stocks gap up and it just gets crushed, right? So you can see the gap up was up here and it just went straight down big on the day. It was like a 20% reversal from the highs. But to me, that's a signal that institutions are unloading, because it's not mom and pops. Mom and pops aren't being like, oh, great earnings, let me sell. They're like, great earnings, I'm going to hold this if I'm long, or I'm going to buy. So this is institutional selling going on here. They're starting to pull the chips off the table on some.
They're taking profit.
Yeah,
they're pulling a Buffett.
And I think they see the data. I mean, they probably have more data than any of us have. They know the economy is starting to slow. They know the consumer's under pressure, and they're being realistic about how much upside is left. And they're probably, like you said, pulling a Buffett and taking profits.
So I got to piggyback on that a little. Stuff that will not matter. First, I got to show you this chart until the stock market goes down. First of all, let's look at bond yields, sovereign CGBs, Chinese government bond yields in the second largest economy. They're plunging, lowest in our database since 2005, 200 basis points below the S&P, below our 10-year note yields. That's part of the reason I'm still very bullish TLT. I've been early, but at some point when that moves, it's going to be so big. So that's plunging. I overlay it with the commodities. It's particularly going to trickle down. But things that will matter, that used to matter, but they won't matter until the stock market, until we have a little bit of normal reversion in beta, and that is inverted curve. Leading indicators negative. That's been almost 2 years of that. Diesel demand in this country is in recessionary trajectory. It's dropped to almost the same level as 2014. Unleaded gas demand is in recessionary trajectory. It's dropped to levels that we haven't seen and going downwards since 2008. Container board, corrugated box demand have dropped below 2019 levels, aren't dropping at the same pace as 2008-9. Stuff from my space and commodities is very bearish, and it all depends on beta's got to confirm it. And human psychology, people are not going to believe it until beta goes down and tells them to start believing it.
Yeah, 100%, man. I think it's super interesting to see. And I do want to pivot over towards, we were just touching on the Federal Reserve, but you know, the Fed watch tool is still pricing in a September rate cut. Is that totally off base? Do you think that if the market drops 10% between now and September, do they cut, or is this like not even close?
No, they're not even consider it, because it's the lesson. First of all, rates went up on the elevator. They're going to go down on the escalator. That's something that's shifted my entire career in business, which is almost 4 decades. And what you see is this chart. We've been looking at this since 2023. This started showing cuts in a year, and they hiked 100 basis points 23. So right now, it's actually, you got to get to November to see 85% of a 25 basis point cut, and 100% in December. But it's still silly with inflation above targets and the stock market at a tear. That's my risk reward. The stock market's going to go down. The question was from where and to where, and that to me is part of why it's going to be a lose-lose, because once they start cutting, it'll probably be too late. As we all know, historically, once you do start cutting, that's usually the signal. Key thing I remember is 2001, and right at the beginning of the year, and then September 2007. So, but to me, it's worse now, because both those times, let's look at 2007 when they started cutting. S&P 500 U.S. stock market to GDP was about 1.3 times. Now it's 2 times. So it's more expensive than ever. And I show you that volatility chart, and it just started at the bottom about then.
One of the things I wanted to bring up to you guys that I thought is interesting here is a chart on the transportation, the Dow Jones transports. And I think this is a very telling chart, is that if you look at the Dow transports, it still has never made a higher high than 2021. Yeah. And here we are rolling over substantially in the last couple of weeks, while the Dow, S&P, Dow made 40,000 of 40,000 peers, S&P new all-time highs, to NASDAQ. And to me, this is important because this tells you basically what the health is of the economy. And if this is rolling over, it tells you that things are not going to be good in the future, and smart money is already unloading the transportation stocks.
So you're seeing that from diesel demand. Diesel is the grease of this system, and diesel demand is on a 50. I look at the annual measure; it's on a very recessionary trajectory, and then people tell me that's not supposed to matter. So I'm taking back in on one chart in commodities. I think this is the only one that matters. If you just look at the ratio of gold divided by WTI crude, it's about $30. 30 barrels of WTI to 1 ounce of gold. It's breaking out higher. And here's one thing that used to matter, but on a global basis, if you take the average 10-year note yields of the top 5 countries in the world and subtract out the U.S. Treasury, see that's a global inverted curve. It's like the lowest ever. The rest of the world's showing their bond yields are showing pretty severe deflationary forces versus the U.S. And what's going to take for the U.S. to cut and for that TLT to take off? It's not going to happen, I think, until the stock market goes down, which is the lose-lose for virtually all risk assets.
What, Scott?
Talk about Ethereum, Gareth.
That's what I was just gonna bring it up. So we got to talk about Ethereum, and I know you got some stuff up here. So I believe last time we were on, we brought this up, and we're like, nah, there's no way they're not going to do it.
There was no chance a week ago.
What's that? Yeah.
There was no chance a week ago.
Yeah. So what changed? Tell us what changed.
Everything changed. So, and that's not hyperbole, even though I'm prone to it. Everything has literally changed. So, you go back to, I think, about May 8th, Donald Trump gave a speech down at Mar-a-Lago, and somebody asked him questions about crypto, and he went on a roll, and he said, if you are into crypto, you have to vote for Donald Trump. You can't vote for Joe Biden. He hates crypto. He doesn't know what it is, etc. And Trump has continued, whether you believe him or not, to double, triple, and quadruple down, even to the point of saying that he's going to raise a crypto army, which everyone knows is the antithesis of Elizabeth Warren's anti-crypto army. So that had to have gotten the attention, I would say, of the White House, even though at the time maybe it didn't seem like a big deal. And then there was exceptional pushback all over the place, with people basically saying, I'm a one-issue voter and I'm going Trump. But what happened after that is the real story. SAB 121, which was the SEC's memo that said that basically banks can't custody crypto. We don't need to get too deeply into it, but they had to treat it as a liability on their own balance sheet, which no bank could do, which ETFs got approved. And all of a sudden, Coinbase is custodying everyone's Bitcoin, and the biggest banks in the world are cut out. They were lobbying hard, but people expected the vote on that to go down party lines, and Chuck Schumer and 9 other Democratic senators went against the White House and against Elizabeth Warren on that vote, and that ended up going through and passing. And the president then said he would preemptively veto the Crypto Market Structure Act, which is going through, and it just passed with over 70 Democrats going across party lines and voting for this to get it passed resoundingly in the House. So the entire political tide has turned. Everybody on the Democratic side realizing this is a losing issue and going directly against the White House, who preemptively said they would veto something that hadn't even hit the ground yet. Insane. And against Elizabeth Warren. And that's why the Ethereum spot ETF, very long story, all of a sudden on Monday became an issue because they have to make a decision by today. And so the SEC went on a complete fire mission to get these applications in. These issuers were given 24 hours to completely rewrite and change things and get rid of staking. And now the odds are that we see an approval literally today. So the Ethereum spot ETF itself, I don't think is going to be a huge story. I don't think it's going to move the market massively. I don't think there's going to be a ton of inflows. You think about the Bitcoin spot ETF approval, we had a year of marketing and anticipation and people understanding it. Bitcoin's a brand name. I'm at an RIA convention literally right now. They don't know what Ethereum is. I can tell you. Most don't know what Bitcoin is. None of them know what Ethereum is almost. And so we're not going to get a rush into this, right? But the bottom line is this is only on the docket today and being forced to approve because the Democrats are capitulating to some degree on crypto.
So is there? I'm looking at the price of Ethereum right now. It was up close to 4,000 earlier. It's back to 37.65. Granted, the stock market's come down, so that makes a little sense there. But is the price action today telling it all? Like maybe it doesn't get approved, or you think it does?
I don't think so. I think it gets approved. At worst, I think maybe listen. This could happen while we're on the show, and I could be proven wrong. So I don't know. But from talking to James Seyffert and Eric Balchunas yesterday on my show, they said more likely it wouldn't get necessarily rejected. The SEC would ask Van Eck and ARK, who have the forced decision today, maybe to pull and just refile. But that would only because I's aren't dotted and T's aren't crossed or something. The intention of the SEC right now is to get these done, which, by the way, effectively deems Ethereum most likely a commodity. So this is big for the altcoin market. And the sell-off, I mean, listen, Bitcoin went from 49 to 39 when the spot ETFs, and then you got that article right there, Ethereum ETF approval could spur 60% rally. That's because that's what ended up being the rally from Bitcoin, from the ETF up to the 74,000 high. So just extrapolating that. I don't think it gets that much hype, but still pretty incredible.
So one of the things I've heard, and again, this is through social media, so I have to ask you to kind of fill me in on the truth of it, is that if Ethereum ETF gets approved, then every other coin can have an ETF. What is that?
I disagree with. I wholeheartedly disagree with that. I think that that's an echo chamber narrative that gets people excited. Every one of these assets is going to be scrutinized differently by the SEC. It depends on which SEC it is, and you just can't really make that jump because let's be honest. The reason that the Bitcoin spot ETFs were originally getting denied, maybe it was not the real reason, but the SEC was using that there was not a market of meaningful size, that it could be manipulated. And the fact that the CME was trading Bitcoin futures was the reason that that was basically deemed arbitrary and capricious by the courts. In the Grayscale case, there's Ethereum futures traded on the CME. Last time I checked, Doge is not being traded on the CME. So there's no market to track in the SEC's eyes beyond Bitcoin and Ethereum. So the others completely, I'm not saying they can't get approved, but they certainly can't get approved with the same justification as these. The reason Ethereum can get approved now is because they did Ethereum futures ETFs and they did Bitcoin spot ETFs. So
does the Ethereum ETF potentially being approved, does that mean that it's not a security? And by default, does that mean other altcoins aren't securities? I mean, does this kill all the Gary Gensler?
No, I think the XRP decision, whether you take it that way or not, was bigger for that. I think that once again, this is a very Ethereum specific thing. We've already had the CFTC specifically calling Ethereum itself a commodity and not making the jump to others. And so, no, now the market structure bill, which FIT 21, which was just passed in Congress today that I was mentioning before, that's a comprehensive bill about the market structure of crypto moving forward that would give a lot more power to the CFTC, taking it away from the SEC and deem quite a few of these things commodities. I think this Ethereum spot ETF situation exists in a vacuum that's very specific to this asset.
Okay, so and so just to be clear, I'm sure a lot of people are wondering, is this finally going to be the alt season? Do you think that this would trigger anything, or you don't think it's going to have any impact on alts otherwise?
I think it's had an impact, right? They all bounced, and I think an Ethereum jump is usually a good indicator of altcoin movement. I can't say it's going to be an alt season for things that are dead since 2016, the kind of alt seasons we saw in the past. But if we do see Ethereum continue to appreciate, after that potential sell the news event, whatever happens, I would expect that money, because listen, once the money's in Ethereum, not in the ETFs, if it's in spot Ethereum and it's in the ecosystem, that's when it trickles down to ERC20 tokens and the rest of the ecosystem. So I do think this is very positive, much more so than like a Solana move where you just see things in Solana, memes going crazy. I think this could impact a lot more tokens than any other token going up. It's really nice usually to see Ethereum go up.
Gotcha. So now turning back to Mike, where are we with gold? Like, what's going on with gold? It's having a big pullback today. It's still kind of hovering underneath its high that it made about a month ago, a little over a month ago. What do you got for us in that regard?
So I just saw a chart on gold. It's way overdue for a bit of a pullback. All-time new highs is potentially making an outside week down. Good support around 2,200. But I keep the key way to look at gold is we've had substantial outflows in ETFs. This is 30 million of a million of ounces of outflows in gold ETFs. Yet the prices hung in there. I show you as gold divided by the S&P 500. I showed you earlier. It's the lowest since like 2007. It keeps bumping up against this resistance around 0.48, 0.50. It's a matter of time. Like gold ETFs will start rolling up, and gold. Here's the fact that in the macro big picture of gold is it's the most enduring outperformer of most commodities over time. It's been still above beating. Stock market's so great this year, but gold's up 13% and it's beating that AI-driven S&P 500 by 2%. It was 6% earlier, and I think it's still going to continue. The deepest pockets on the planet are buying gold, and that is central banks led by China and potentially on the back of the unlimited friendship. So to me, it's just a matter of time it takes off. And the bottom line trigger to tilt these ETF outflows to inflows and to get gold to break above this resistance versus the S&P 500, I think is a correction in beta and a little bit of reversion, what I showed you earlier, in volatility, because the quote I like to use is, when you're in the West, in the US, why buy gold with the stock market on a tear, NVIDIA, S&P 500, and T-bills at 5%? That is where I have to point it. At some point, that's going to revert. And so to me, that's why I think gold's just a matter of time. It's all going to go up. And again, but versus gold is the number one go-to alternative to the dollar on a global basis. And still, there's other currencies, fiat currencies, but for store value, historically and still, that's where it is. So I'm looking at it, it's just a matter of time. But for now, it's a retracement in a bull market.
So I'll throw this out to you guys as we kind of wind down here, but we've seen copper reverse. Copper had a 40% move recently, I think in the last month, and it's finally had a big fall yesterday. Oil's breaking down, gasoline's breaking down. Is this real weakness, or is this election weakness? Because we all know that around elections, commodities like energy start to come down to try to make people happy. What do you got for us?
Well, so let's rope that in first. I'll give you my outlook on crude oil. Crude oil's, I love this quote when people think OPEC 6 crude oil prices. They don't. Futures traders do. Leverage futures traders do. I used to do that. I used to cover them. And this is just the chart of the S&P, of WTI crude oil rolling over, 100-week moving average, outside week down. And managed money net positions got way too long here at the peak, around 87. I did get that one as a Maverick. I've been a stooge in crude on the way up. I had to take that stooge pain, and now the Mavericks kicked in. They got good highs every time managed money positions get extended. Crude oil rolls over, and crude oil to me needs to get to below 50 to reset the supply and demand imbalances like natural gas did. So let's show you what happened with copper. Copper is just like silver now, and copper is an industrial metal. Silver is now industrial metal. And what again I show you here is managed money net positions. These are hedge funds. They got to be 30% of open interest, way too long, the most since 2021 in the run up. And now it's rolling over, and copper almost always does that. It was catching up to beta, S&P 500. Now it's starting to trickle down. And then I just tilt over to the key thing I showed you earlier about China. If you're bullish copper, you got to be watching this. Severe deflationary sources on the number one demand pull source for copper. So I see early days of pretty severe deflation in copper from all-time highs. Continuation of deflation forces from petroleum, mostly crude oil. Remember, the high was 147 in 2008, and here we are at 76. And and this is the key thing. If beta needs to go up, otherwise these deflationary forces are going to accelerate from commodities.
Amazing. Wow, talk about an action-packed packed episode, guys. I think that's a great place to end it, guys. There's
Perfect.
lots going on here. Next week, I hope we're back again at 3 p.m. Hopefully, everyone. Thank you, Scott, for jumping on from a hotel room in Vegas. There, that's awesome. But follow the gentlemen. You see their @ handles below here, guys, and we'll be back next week with another Market Mavericks. Thank you guys for tuning in. Have a good
All
one.
right, boys.